Okay, let's take a look at 4-15B and 4-16B. That'll help you with two of the three problems in your second assignment for Chapter 4. The first one is pretty easy, so we won't go over that. So first here, we've got some transactions, and they ask us to determine cost of the inventory that was sold and then do a multi-step income statement. So first thing here, we purchase inventory, list price of 40,000. We buy it under the terms 210 net 30, so 2% discount if we pay within 10 days, otherwise pay in 30. So the second thing that happens is we return $4,200 of the merchandise to the supplier within 5 days and then settle the remainder within the discount period. Then we sold that inventory for $69,000, had selling and admin expenses of $12,000. We had interest expense of $800, and then we sold some land that cost us $15,000 for $20,000 cash. So the first thing we're going to do is figure out what the cost of that inventory was on a net basis. So the gross purchase is $40,000. I subtract the return, and then I subtract the discount, and I calculate the discount as my net purchase, or 40,000 minus 4,200, so 35,800, times 0.02. So I have a discount of 716 that I earn by paying on time. So that means my net inventory cost is $35,084. So now I can do the income statement. So first of all, I have the proper header, the name of the company, what we're looking at in the period of time. So I have sales of 69,000. I have cost of goods sold of 35,084. So I have gross profit of 33,916. That's sales minus cost of goods sold. I have selling and admin expense as my sole operating expense, so I have operating income of 21,916. That's how much I made on the core purpose for which I'm in business, buying material and selling it. Then I've got some non-operating items. So these are items that are outside of my normal operations. That's interest expense and that $5,000 gain on the sale of land. So my bottom line, my net income is 26,116. That takes into account everything. But again, these two items here are not why I'm in business. So I separate them out to make my financial statement more comparable to other companies. So let's take a look at exercise 4-16 here. So we start out with some beginning balances across the top because we're starting out year 3 here. And then I've got some transactions where I'm now the seller of inventory. So in the first case, we sold inventory costing $52,000 for $85,700 on account. So you can do these two transactions in either order. I do the sale first, so accounts receivable goes up, retained earnings goes up, I recognize revenue, and then I recognize the cost, so I reduce my inventory, pull down retained earnings because I'm recognizing the expense of $52,000. Then I delivered the goods to Anderson under terms FOB destination. That means the seller pays the freight, which is me. That was $600. So cash goes down $600. I recognize an expense by pulling retained earnings down. Here's the expense of transportation cost. And I have a cash flow, a negative cash flow that's an operating activity. Next, I received goods back from Anderson. So they declined to accept some of them and ship them back to me. The goods cost me $7,000, were sold to Anderson for $9,200. So I reduce the accounts receivable for Anderson, reduce retained earnings, and reduce my sale because my revenue is now less. And then I add the inventory back. I put stuff back on the shelf that I got back, and I build back up my retained earnings. This is a little bit weird, but I'm adding back because the cost of goods sold normally pulls down my retained earnings. So when I reduce cost of goods sold, I pull my retained earnings back up. So I have a negative expense here for that. So just like when we sell something, we have two transactions. When we receive physical goods back from a customer, we have two as well. And then it says granted Anderson a $2,000 allowance for damaged goods. So some of the stuff was bad, but they agreed to keep it and rework it. So in that case, I reduce accounts receivable and reduce retained earnings, reduce my sales, but I don't do the inventory side of that transaction because I didn't get the goods back. Then we collected a partial payment of $68,000 in cash, so cash goes up. accounts receivable goes down, an asset exchange transaction, and I've got 68,000 of inflow for operating activity, and everything is totaled there. So the other thing they ask you to do are the financial statements based on that. So my net sales, if I add up the revenue figures in my revenue column, my total sales were 74.5. Cost of goods sold was 45,000. And my gross profit, then I can calculate that at 29,500. I had one operating expense, transportation, out, and so I've got net income of 28,900. My balance sheet, I've got assets and my cash of 117,400. These are the totals on my columns on the transaction grid. Excuse me here. Got accounts receivable of 6,500. That's the net amount still owed to me. And inventory of 27,000. So I have assets of 150,900. I have no liabilities. I've got common stock of 55,000. Retained earnings now of 95,900. So stockholders' equity of 150,900, and then add to zero, I get the same amount. So my assets equal my liabilities and stockholders' equity. So if you have any questions, please shoot me an email or give me a call, and I look forward to hearing from you. Bye-bye.